muslimadvocates.org. That's MAY at muslimadvocates.org. Or you can text questions to 202-492-2744. Hello, everyone. This is Nahid Qureshi with Muslim Advocates. Just wanted to let you know we're going to be getting started in just a moment or two, giving a chance for folks to join the call. There are hundreds of organizations from all over the country joining, and so we want to give people a little extra time to get on the line. Hello and assalamu alaikum, everyone. My name is Nahid Qureshi and I'm the Deputy Director of Muslim Advocates. Muslim Advocates is a national legal advocacy organization headquartered in Washington, D.C. We work in the courts and in halls of powers and communities to halt bigotry in its tracks. I want to start by thanking everyone for joining our call today on how the stimulus can provide assistance to nonprofits and mosques. We know that this is an uncertain time for so many of you, for our families, and for the country as a whole. Our team at MA has been working to assess the needs of our community and to highlight all of the great work that so many of you are doing in your own neighborhoods and towns. And as part of our work to support charities and nonprofits, we organized today's webinar to ensure that community institutions and organizations like yours have the same opportunities as everyone else. We know there's an unprecedented need, and we want to do everything we can to help you prepare and have the relevant and necessary information. We want you to be clear that this isn't legal or accounting advice, but rather educational information to put you in the best position possible to pursue this help. Before we begin with our speakers today, I have just a few housekeeping announcements. Due to the high number of callers today, all of your lines will be muted. But we have received already a great number of questions, but you can still submit questions by email to May, M-A-Y, at muslimadvocates.org or text them to 202-492-2744. That's 202-492-2744. And lastly, this webinar is going to be recorded, and so we'll be sending out the recording and some additional informational materials after today's call, and we hope you'll share them with other partners in the community. Today, we're very lucky to have some great experts on the stimulus bill funding available to nonprofits. And they are in crazy high demand. And in fact, I believe both of them have done multiple webinars in the last 24 hours. They might be both on their third or fourth webinar. So we're very appreciative that they made time for us today. Our first speaker is Joey Mosques, Managing Partner at Miller Mosques CPAs. Joey leads a team of experts that provide top-of-the-line tax, accounting, and advisory services ranging from complex tax planning for mergers and acquisitions to financial and benefits planning for corporate executives and entrepreneurs. Thank you so much for joining us, Joey. We are also very pleased to be joined by Stefan Klein, who serves as the Interim Director for the Washington Office and Associate Vice President for Public Policy of the Jewish Federations of North America. Prior to the Jewish Federation, Stefan was counsel at our close partner, the Alliance for Justice. He's been in touch with members of Congress and with folks at the highest levels of the administration and has very up-to-date information to share with us about where things are. Joey, can I ask you to get things started?
Yes, of course. Thank you so much. I'm gonna take over the screen if it's at all possible and get the presentation started. Let me just get the slide deck rolling. There we go. Okay, so today I'm going to cover specifically on the NGO side, the government assistance programs that are out there under the FFCRA and the CARES Act. The webinar is going to be straightforward. We're going to cover the PPP and go through that entire program for the individuals. This program just came out last Friday, and as of today, it's supposed to be kicked off and started. And I can tell you the demand looks like it's going to be very high. One of the banks, Bank of America, opened up their portal this morning, and I was just told it recently crashed because of volume. So everybody is lining up to file for the PPP program. The forms were sent out in draft on Monday. As of last night, the application form for the PPP has been completely changed. So if you have filled out the paperwork like we did, you can sort of throw that out the window and start all over today. A lot of the banks are utilizing online, and some of the banks are utilizing basically take the form, complete it, and just email it to your representative. Because of the volume of the Paycheck Protection Program, one of the banks was telling me that they average about 8,000 applications a year, and they're anticipating 40,000 applications in 1 week. So what we're recommending for everybody is that if you are going to go through the Paycheck Protection Program, is for you to take it, put it into, contact your bank, and be able to go through and deal with the bank directly in the way they want to be able to process the form. Enough about banks, let's jump into the Paycheck Protection Program. So this program is 100% SBA guaranteed. It provides an interest rate not exceeding 4%, has a 10-year term, and has no fees that the banks will be charging you. And the way this works, and it's a little bit of a formula that I'm going to get into a little bit here, is your ability to get in by calculating your average payroll for the previous year. So you calculate that, and then you will multiply that number against 2.5 to come up with the amount that you are going to be able to borrow. And all of these details, we're going to work through them so you can understand step by step of what needs to happen to calculate this particular amount that you can borrow. What's really appealing about the program, number one, is it's got a 6 to 12 month deferral. So when you get the money, let's assume you get it in April 2020, you don't have to make the payment potentially as late as April 2021. And if that you think is good, there's even one more thing that's really appealing, which is the fact that the SBA program for the Paycheck Protection Program has a debt forgiveness component that I'm going to speak about. Okay? And that debt forgiveness component gives you a lot of potential not to have to pay back the money that you borrow from the federal government. So to be eligible for a not-for-profit organization, is that you need to have less than 500 employees, okay? It does qualify for businesses, but that's not an issue. But a 501c3 can qualify for this loan. When we go through and we looked at the details of the law and what it covers, faith-based organizations are not covered, but if you're a faith-based organization and you have, for example, a daycare, the daycare component can help you. If you have elder care, the elder care can help you apply for the loan. But if you are a purely faith-based organization, what we've been hearing from the SBA, at least for the time being, is that you will be ineligible to be able to submit for your synagogue, mosque, or church if it doesn't have some sort of ancillary other services that are out there.
Joey, can I interrupt for a second on that point?
Yes, Stefan.
A religious organization that is a synagogue, a mosque, or a church is perceived by the SBA now as a 501c3, even if it hasn't filed. This is one of those things that lots of folks on Capitol Hill and in the White House are coming out with, and a mosque will be able to file for this program.
I mean, that's amazing news. So if that's the case, then that really qualifies the organizations to apply. So I stand corrected if that's the case. Thank you, Stephen. So when we go through the PPP eligibility, again, we talked about what you just heard, that you're allowed to do that. The objective behind the PPP is for you to maintain your staff's employment. Ergo, you're going to have a period where you need to have your staff be counted, and then we're going to be going into that in greater detail to explain how that process works about. But the whole idea is that if you have staff in payroll, you are going to be able to go through and have the loan forgiven. So first and foremost, the program is retroactive to February 15th, but started actually today. Number two, the loans are supposed to be available on a first come, first served basis between now all the way to June 30th, 2020. If you have had an SBA 7A loan in the past, you are allowed to go through and still participate in this particular program. So the calculation again falls into what I mentioned before, two and a half times your average total monthly payroll cost, which we will define later, that you incurred in the prior year. So if you're an organization that existed in 2019, you really need to have your 2019 numbers, and those 2019 numbers then can be used to calculate your average monthly payroll costs. So then you can multiply it times 2.5. If you happen to be an organization that was not established in 2019 and you became established in January 2020, then you only need to show 2 months, January and February, calculate the average between those two, and you can still borrow money. If you are in the unfortunate case of establishing your NGO in March of 2020, you're probably not going to get any money because you don't have any track record. Okay? There's no really such thing as a seasonal employer in the NGO market, so we're going to skip that. But what we're going to do is to go through the breakdown of what is a monthly cost average. So the definition of this right now is it's the sum of compensation, which is salaries and wages, vacation payments, separation, or when you terminate someone, you'll give them severance package, your retirement plan, and any employer health insurance benefits. And then you see this line item that says state or local taxes. We looked at that, and that really what that means is SUTA, which is state unemployment tax payments that the employer may pay. And if you put all of those together for 2019, and then take the average by dividing it by 12, you will arrive at your average monthly payroll cost that then you can multiply times the 2.5. And that's how you can determine the amount of money you can get from the PPP. So when we go through and we look at it, there's certain things that are excluded costs. If you have compensation in your NGO, let's assume for the executive director, and that executive director makes more than $100,000, you can bring their number all the way up to 100 and not in excess when you calculate the average monthly payroll costs. And this has been a little bit of an issue because some people misread this, and they kept on thinking that if they go through and make more than $100,000 that they're completely disqualified. That is not the case. The law is clear. It is up to the $100,000 limit. Okay. The other part that we have is any compensation for anybody that works overseas. They're not going to be part of this because this package is designed to give relief to people that are working stateside, not the employees that they're working remotely, even if they're US citizens. Then you have any tax credits that you've taken on the Qualified or Sick Leave Act. Those will be reducing your relief or will be reducing your payroll costs, and therefore will not be part of the money that you will receive as a lent money to you. The PPP also has a very interesting clause that says you should not take advantage of any other tax credits. And there's other tax credits that are available in the CARES package that if you use them alongside the PPP, that will not be considered allowable. So the biggest component of all of this is what I mentioned before, is the whole forgiveness component. And what the government said is they're going to forgive up to 100% of the loan if you retain the same number of staff when you receive the loan. So let's assume we borrow the money today. The government's going to go and take a snapshot of how many staff you had. And the snapshot is based on FTE or full-time equivalent, or if you go through and you have the compensation. So when you put those two together, you will have a baseline. If you are an organization that currently has 15 employees, and let's assume you're paying them $120,000 a month, then that becomes your baseline. By June 30th, 2020, there's going to be another assessment done. And if you maintained the same number of FTEs and the same number of payroll to a given degree, which I'll explain later on what flexibility there is there, you can then be able to get the full loan forgiveness from the government. And then that also has some limitations. So the biggest limitation is the loan grant forgiveness is limited up to 8 weeks of your total payroll costs, as long as you retain the staff. If you go through and you start retaining the staff at a lesser level, then you will be going through and having that be watered down. And I'll explain that in greater detail in the next slides. Now, one of the things that we have also in the PPP program that will hurt your loan forgiveness is if you have any cancellation of debt, which we call COD. If you have any COD, then that will be going against your loan forgiveness amount, okay? The amount forgiven, again, is going to be reduced proportionately by the reduction in staff like I talked about. Then you get this 25% of the total compensation window. If you are paying, again, $150,000 salary a month, and that goes down by 20%, that's not a problem. Once you cross the 25% threshold, then the loan forgiveness component will start going down also proportionately to the amount of pay that you stop paying your staff. So how does this work again in detail? You'll have to go through and have your baseline. And then once your baseline is calculated by the number of staff and the gross wages or the average payroll costs, then later on, the government's going to go through and make that assessment and determine if you as an individual entity have met the same numbers or exceeded them. But if you went below, there'll be a proportional cut in your loan forgiveness on the PPP program. Okay? Now, one of the things we did is we put some resources for everybody, and these we can go through and make sure that they get sent out. That gives you access to the Sba Ppp Program, which is at the bottom of the screen. And then you have the 800 number that you can use to call the Sba. They actually are doing a fair job of answering phone calls so that you can apply for the PPP program. Also on our website, we created a checklist that people can use so they can understand how to apply for the PPP. And like I said, there's also a link. Also, because we're in Virginia, we included the link for anybody that needs to file unemployment coverage.
Thank you, Joey. Thank you so much for that informative presentation. As a reminder to everyone on the call, you can still submit questions by email to May, MAY @muslimadvocates.org, or text them to 202-492-2744. Stefan, can I turn things over to you now to share some more insight on how the application process has been working, any other information that you think would be useful at this point about the process? And I know we have a lot of questions that I'm going to be directing to both of you, but Stefan, of course, it would be helpful to hear what you've even been experiencing today.
Thanks, Nahid. It's been a busy day for the SBA. You should know that there are approximately 3 million small businesses in this country. There are 1.2 million nonprofits. There are an additional many hundreds of thousands of churches and synagogues. So there are, 4 or 5 million potential applicants for this program. And from the SBA's perspective, it seems like they are all interested in applying. Who knows whether that's true, but they've never had a program that's been subscribed like this, or at least that they think potentially they could. They're feeling swamped and beleaguered, and the banks at the local level are feeling swamped and beleaguered. We know that as of around noon today, that there had been about $1 billion of successful applications made through this program. I haven't heard more recently how much more it's been since then, but it's been several thousand applications were successfully entered into the portal. One of the concerns that we faced was that the program application, as Joey talked about, is made through the local bank, a bank typically that has an SBA connection, but in this context, the SBA has broadened accessibility to other banks. Those banks were feeling a little bit out of their comfort zone. They weren't getting the information from the SBA about this program. They didn't know what the application itself would look like. They had a draft, as Joey talked about, on Monday or Tuesday. They didn't get the final application until last night. Joey, I wouldn't say that you have to throw it out. It's a different form slightly, but most of the same information, and frankly, the main calculation is the same. The form itself will take 5 minutes to fill out. It's figuring out the number of how much your payroll is, the eligible payroll, and then how much you can apply for that's going to take you time to figure out. The application itself is easy. There are a number of certifications that you need to sign off on, but the application is easy. Let me just go through a couple of things that we've learned this week. The information coming out of the SBA has changed. Most of it is not terribly significant. Some is more significant than others. For instance, while the statute said this would be up to a 10-year loan period and the interest rate could be 4%, as Joey said, when it came out on Monday, it was a 0.5% interest loan. The final program says it's a 1.0% loan. So still low, but different than it was. Final program also said that the loan term is no more than 2 years, and that interest starts kind of from the beginning. And so that was a difference from what was originally expected for the program. A couple of other pieces. One thing that changed from the law when it was written, there were 4 categories of expenses. Some interest that the money could be spent on, payroll being the largest, and benefits associated with that, utilities, rent, and mortgage interest. When they came out with the program this week, they said because of the likely significant demand, and frankly, because of the purpose of the loan, of the loan program being set up, they said that 75% of what you were going to spend money on needed to be on payroll. That wasn't in the program when it was written by Congress, but that was how the SBA interpreted that. One other tweak on the 100,000, and I think it's worthwhile going through the scenario a little bit. There's a cap of 100,000 on eligible payroll expenses per individual. An employee could still make more than 100,000, but anything over 100,000 is disregarded for these purposes. The 100,000 also includes benefits. So if you're 75,000 of salary and 25,000 of benefits, that would be included. If it goes over the 100,000, it would not be included. It turns out that while when you're doing the calculation to figure out how much is going to be converted from a loan to a grant, as Joey talked about, you're comparing different payroll periods from June 30th of 2020 either to June 30th of 2019 or the first 2 months of 2020, and it's your choice, whichever is going to be the most favorable calculation for you. One of the things that you should know is you can still furlough someone or terminate them and bring somebody else back. Does not need to be the same individual by June 30th, and it would count as if it was the payroll had been maintained. Similarly, as Joey talked about, you can cut salaries as long as they're no more than 25%. There's a caveat to that, or not a caveat, there's an exception to that. That only applies if you're below 100,000. You could actually cut somebody's salary from 200,000 to 100,000, and they'd go into the calculation at 100%. So it's only when the 25% total is less than the 100,000. So it's a little bit of a change. So I think on the payroll protection program, I'm going to stop there and answer a few questions with Joey. But I wanted to just mention, since there are other pieces of information in the CARES Act that I'd like to spend a minute on just laying out there that I think could be useful to your organizations. One, there's a new charitable non-itemizer tax deduction that caps out at $300. What this means is, you may recall that before 2017, there were many more people who itemized their taxes, higher income people, but there were a lot of not quite so high income people that itemized their deductions. In 2017, that changed. There's now only a very relative few people who itemize. This non-itemizer means that if you don't itemize, you get the standard deduction. You could still get a tax deduction for up to $300 per person, or I guess per taxpayer. It's not a lot of money, but it can help with a culture of giving, can count for a donation to your organization. So that's real important. There's a lot of social service spending in this bill that could trickle down to your organizations: aging services, emergency food and shelter program, low income energy assistance, and the like. So that's important. And I don't know to the extent that your organizations receive Medicaid funding, but in the last stimulus bill, the one before the CARES Act, there was a 6% increase in Medicaid funding, and that is going to impact a lot of human service agencies. So I wanted to just mention that, but I'm happy to answer any questions that I can about the Paycheck Protection Loan Program.
Thank you so much, Stefan. That was so informative. And we have just gotten so many questions, and we're doing our best to kind of try to consolidate questions that are really about a common topic. And one thing that we're getting quite frequently, and I want to direct this to you, Stefan, just because you jumped in earlier, there are a lot of Mosques on this call. So if we can just very clearly kind of answer the question about 501c3s and Mosques, and basically the clarification that Mosques will be able to apply.
Yeah, it's a good question. So the language in the bill says 501c3 organizations. When this came out, the question is whether an organization like a mosque, which fits within that part of the tax code, but hasn't filed is eligible. And in our contact with the White House and with congressional leadership, they said that it was. I believe that this will be confirmed in writing over the next few days. And I'll tell you a little bit more about it. But in essence, if a mosque is interested, they should get their ducks in a row, that they should try to apply. If they're told a mosque can't do it, there will be clarity. For instance, on the advocacy piece, Senator Rubio, who's the chair of the Small Business Committee who wrote this, wrote to the SBA administrator and said a 501c3 includes religious organizations. Minority and majority whips Clyburn and Scalia wrote to their colleagues in the House on I think it was on Wednesday, saying congressional intent meant that houses of worship should be included in this program. And in our contact with the White House, they agree that it should. So a local bank may say, you're not a 501c3 organization, but there will be clarity in the coming days. And we are quite confident that mosques and churches and synagogues will be covered. And I can tell you that some of them have been in the mix of those who've successfully applied today.
Okay, so the clear message that we want to send to folks is send in your application. Yeah. And there's no harm, just send it in. You don't want to hesitate about sending it in because you're worried you won't qualify. You can always be told you won't qualify, but don't delay just because you're worried you might not qualify. So I'm going to ask you one more thing, sorry, Stefan, before you jump in, and then I'm going to come to you, Joey. Stefan, like another thing that people are really, if I might say, stressed about is that folks have been contacting quite a few banks, and those banks are telling them, they keep hearing that some people have successfully applied, but some banks are telling them, we're not ready, we're not sure when we're going to be ready, or we'll be ready next week, or something like that. Is there anything you can say to speak to that, or like what an organization can do if, for example, they have a relationship with Citibank and Citibank's telling them they're not ready?
I can't give you good news about that. We are hearing that as well. You don't have to go to any particular bank. So if one bank says that, you can go to another. And I can't tell you that when the bank is ready sometime the end of next week, that there will still be money left in this pool. This is a first come, first served $349 billion fund. And when it's done, it's done. Now we'll be advocating for more money to go into it, but we obviously can't guarantee that. I think that this is, there is a lot more interest in this program, and the banking industry and the SBA seem ill-prepared for it. And I think that there's a lot for them to learn, but from an applicant standpoint, they've got to knock on every door that is an SBA loan affiliated organization. I did want to give you a resource from the Jewish Federations of North America. We have a new website that is called jewishtogether.org. There's specific information about this program, about FAQs on the details of how to apply and what different terms mean, and there's a loan calculator on that. One of the things that is also on that is SBA approved banks, a list of all of those divided by state, so that might be helpful. But before I yield the floor, one other thing I wanted to tell you, that in terms of getting your ducks in a row, the main thing is getting your payroll information in a form that works. They're basically looking for the entire 2019, I forget what the term is, but the set of payroll information for 2019. So that's the one thing you need to do. And they're also looking, excuse me, probably for some tax information. I don't know exactly how that will work. For 2019, many people's organizations' tax returns are not complete, but I guess the most recent tax information that you have. And again, if you're a mosque and you don't have any of that, probably some kind of audit, but you do the best you can. But getting that paper information together is a prerequisite before bringing the application form with your calculations to the bank.
Okay, that's very helpful. Hold on one second. So we just have, unfortunately, unbelievably, 100 questions. So I'm going to try to get through as many of these topics as possible. So I'm going to ask both of you, let's try to go through these groups of questions. And then if we miss a topic at the end, I'll give you a little extra time at the end before we close, just to give folks the chance. So our friends, I want to give them a shout out at ADC have asked a question that a lot of people have asked. And Joey, I was hoping you could address this. Like, a bunch of people have been asking about, number one, like, do you have to be, and they just want clarification, do you have to be formally like a C3? And then number two, what if you have both a C4 and a C3, where maybe your employees are under the C3, or sorry, under the C4, but other things are coming out of the C3. So that's kind grouping together about 25 questions we've got. Joey,
Okay.
if you wouldn't mind.
So I mean, again, the law is pretty clear that you need to be a 501c3 or other like tribal organizations or some other not-for-profits, but it does not include 501c4s. So when you're filing, you're going to be filing based on whatever is the payroll report you're going to have. And when Stefan was talking about getting your house in order, what we tell our clients is you need to have your W-2s, W-3s, Form 941s, and 940. And you could use those forms to be able to back up your claim for the average monthly payroll. But if you are a 501c3 and a 501c4, and the C4 has been paying for all of the payroll expenses, you're going to be in a little bit of a predicament if you've left all of that on your 990, because what you've done is you've shown that the 501c3 doesn't have any payroll that it can claim.
Yeah, I agree. I don't think they could do it.
Oh, thank you so much. That's helpful. And so what I guess we would take away from this is anyone in that position should definitely talk to their accountant, talk to, their consultants they work with, their financial advisors to get really clear answers about their specific situation. But that's incredibly helpful. I wanted to ask, Stefan, you talked quite a bit, sorry, I shouldn't say quite a bit, about you mentioned the worksheet, and that's one thing that we looked at, our organization looked at, and we're just very excited about. Basically, your worksheet helps determine what the loan forgiveness is, because for a lot of people, they see this and they see the word loan, but people do have the ability to give a lot of that loan forgiven. So can you just talk very briefly about the worksheet and how people, and I know we've sent around the link and we will send around the link, but how the worksheet works and what the key calculations are?
I think you've probably seen it more recently than I haven't. I don't know what I haven't actually looked at our worksheet in a while. It's supposed to be transparent. And again, I believe the main thing is putting in the payroll numbers and then seeing whether the different benefits can be included as part of that. There are certain benefits that are not going to be included in the mix, like FICA, which is excluded by statute. But it's a way for you to figure out specifically if there are if the different benefits can fall into different categories. There is one category that's not that we're talking about that is not specifically enumerated in the statute, which is parsonage. And I don't know if that applies in your community. Where a mosque gives one of your clerics money for housing specifically as part of their compensation, we're saying that could be included as one of the benefits. That's not specifically enumerated in the statute, but that's something that we're saying can be used.
Joey, thank you so much, Stefan. There are a lot of mosques around the country that have Islamic schools as part of their mosque. It's part of the mosque. And they have, and then there are also independent Islamic schools that operate as private schools. So folks have a few questions about how this would apply to them. And also relatedly, when payroll expenses are reduced during the summer for the schools?
So number one, any mosque or religious organization that has a Sunday school, weekend school, or even private school, as long as they've got payroll going for those schools, for the teachers, they can qualify for the PPP, and we encourage them to go through this process. And they can also qualify for the EIDL, but that's a different kind of loan.
Okay, okay. And then how about one more for you, Joey? Someone's asking, can the PPP loan be used to pay down existing principal debt?
So the PPP is designed to really go for payroll, not to help somebody refinance their existing debt, okay? And Stefan, you wanna jump in on that? Because you were talking about the latest thing about 75% of the money.
No, it's the same categories as was originally there. It's just that if you were planning last week to spend, 100% of the money on your building, which is an appropriate expense, or you're building new utilities, now you can't. You need to spend 75% on 75% on payroll and benefits, and no more than 25% on this other stuff.
Yep. And if they are planning to refinance debt, they might want to look potentially at the EIDL loan, but the PPP really is designed for payroll.
Okay, thank you. Another question about payroll. Can you, and maybe Joey can start this one too, but the 8 weeks of payroll, does that mean that the loan will only be forgiven for 8 weeks?
Yes, simply stated, the maximum you're going to get is 8 weeks of loan forgiveness. So if you think about it, you might hit a 3-month window, and you're going to borrow 2.5 times payroll, and you're going to get full loan forgiveness for a maximum of 8 weeks. So there is going to be some overlap taking place. This is not, you keep on paying your staff and the government's going to keep on paying everything for you. It has a definitive time window and sort of a wait window to it.
One more question, and I'll start with you, Stefan, for this one quickly. We know, and we've heard, and I learned so much on your webinar earlier today, for example, but a speaker mentioned how many loan applications they believed had already been approved, or the amount of money that had already been approved. Do folks have a sense of how soon these groups will be actually getting that money, as opposed to having an application in and looking like it's approved? Basically, any clarification you have on what the actual status is and timeline for receiving the money.
Yeah, I guess the answer is I don't know. But when I heard the number from earlier today, I was told the language, and maybe Joey can comment on this, that that was the amount that was approved. Now, that's different between approved and actually getting the funds. And I guess potentially approved meant it was approved by the bank and went into the system, but it sounded like SBA had approved up to $1 billion or something. Now, I don't know how long, and I'm not a banker or a finance person, from approval, how long it actually takes to get the cash. But this whole purpose of this is going to be a very expedited process. So I don't know what that means, but it sounds like from approval to actually money in the organization's hand should be, no more than several weeks, not months, but I don't know more than that. Maybe Joey, from your perspective.
Yeah, no, I mean, you're saying the right thing. The banks right now are still trying to gear up to digest all of this stuff. And they're telling us that they're trying to turn the money around within a couple of weeks. But so far, all we've been doing is feeding them applications. We have not seen any of our clients get the loan funding yet. And for the PPP, it literally just started now. And for some of the banks, it's not going to start till Monday. So
okay, thank you.
We don't have clarity, unfortunately.
That's very helpful. Stefan, would you mind, just because you talked about this a little bit earlier, just very quickly ticking off really quickly what documents somebody would need to apply? They just thought, this person thought it would be helpful to just hear them in very concisely and quickly.
So you need documents at 2 points in this process. At the beginning, you'll need something to show proof of payroll. And Joey can tell the specific forms, but you need proof of payroll and proof about the organization, something like a tax form. At the end of the process, you'll need to show, again, what your payroll is as of June 30th in comparison to either the first 2 months of the year or June 30th of 2019. So you need payroll stuff, and you need to be able to show, here's how I actually spent the money. But Joey, what are the best payroll documents that they can have?
So thank you. I mean, again, we go back to, you're supposed to should have all your W-2s, W-3 forms, Form 940, Form 941. 9 out of 10 of the people that do payroll are typically like your ADPs and Paychecks of the world, or a payroll servicing company. It's very rare you're going to be doing this in-house. Reach out to them. They'll be able to give you the reports. If they don't have them, I'm hoping you have an accountant or a CPA. They'll be able to substantiate and provide the necessary backup to do the math, and most importantly, have the backup when the bank asks for this. Because what most people don't understand is this is just the starting point when you fill out this application. The bank still has to go through and do the underwriting process, and you're going to have this backup of those things that I talked about.
Kind of a related question. People are asking a lot about payroll and like what counts as payroll. And a question we're getting a lot is, does it include consultants or contractors?
No. Okay, so that's an easy one. We get asked this all the time. Contractors are not employees. By the sheer definition, they're subcontractors. If they've been laid off, they need to go to the Virginia Employment Commission or their own local state unemployment, and they will file for their own coverage and benefits, which are pretty good now. So they do not count in the payroll cost.
Oh, thank you. And a question about employees. Folks have talked a lot about full-time employees, but a lot of Muslim organizations and mosques and community organizations and mosques overall in the larger community only have part-time employees. Is there any recourse for groups in a situation like that where they have no full-time employees?
That's not a problem at all. Go ahead, Stefan.
So again, payroll numbers apply in two different ways. One is an organization have fewer than 500 employees, and that might apply to some of your bigger schools or whatever. But the real number is at the end of is your payroll can include full-time people, part-time people, or seasonal people. And you put them in for the calculation of loan forgiveness, that becomes a certain number of FTEs, full-time equivalents, and you're making a comparison back to 2019 or the first 2 months of 2020. But there is no presumption that it needs to be a full-time person. There is one difference, which is, again, if there was somebody who was full-time and you've had to make them part-time, that might equal a more than 25% reduction in their salary. That would have consequences for the forgiveness, but that they're full-time or part-time doesn't make a difference.
And the point of it is that's why I use the words FTE, which is full-time equivalent. There's a mathematical equation you calculate on part-timers to come up with that base number that you can use at the beginning and at the end of this program.
So just to be clear to everybody out there, what they've communicated is that it's okay if you don't have any full-time employees. One more question. This is a different topic, but really important and something a lot of people are asking. What type of documentation about expenses do we have to maintain during the covered period of the loan? Like, and I heard quite a bit about this on your call, Stefan, about, is there going to be an audit? Like, what's the reporting requirement?
It's a little unclear, but you have to assume that there could be an audit in the future. I mean, I think your typical payroll backup is one thing, and your utility bills and your mortgage statement or your rent. I mean, it's copies of the bills, but yes, you could be audited after the fact.
Yeah, what we're telling all of our clients is when you're spending money, make sure you're at bare minimum, you have the receipts that shows where the money went. Again, ideally, you should have an accountant that does the accounting for you, so you have financials that you can produce and you have receipts that back them up.
That's very helpful. Thank you so much. How do we factor in any employees that resigned between 2019 and February of this year for reasons unrelated to the coronavirus?
So again, for the loan purposes, other than a new business, a new nonprofit, you're really figuring out what the payroll was through 2019, the average monthly payroll times 2.5. For the loan forgiveness, if they were, it doesn't really matter why they left. You're looking at the comparison between either June of 2020 to either 2019 or the 2 months in 2020, and you're going to do what's best. It doesn't matter why they left. Now you could cure that if you wanted to. You could hire somebody else in that position before June 30th, on June 29th, and then they would be fully covered. Doesn't matter why they left, and it's just making a numerical comparison.
Another question about expenses generally. What if our payroll expenses make up a small percentage of our overall expenses? Can we use the loan to pay other operational costs?
The answer is no. There are specific enumerated things that you can use the money for, and 75% needs to be payroll, and 25% could be those other categories. On the other hand, money is fungible. So if you have some payroll money, then you could use that for something else, and you could use it to pay the payroll. So depends on how you can't use the money for other things, and that's clear, and that would be fraud. That would be a crime. I don't remember if it's fraud, but money is fungible. And if you show that you're using the money for payroll, then it doesn't matter whether the money that was in payroll went somewhere else.
And are either, okay, this is back to the topic of institutions. We've talked a bit about the fact that quite a few people are going to their banks and getting very frustrated because the banks aren't ready to respond to these requests. Which banks are you two aware of that are accepting applications right now? The only one we as Muslim advocates have heard about where folks have submitted successful applications is Bank of America. Are you two aware of other institutions that folks can approach that have submitted applications successfully today?
Yeah, so the Bank of America website, like I said, had already crashed. So that started last night, past midnight, and it didn't go well. We are dealing with a regional bank called M&T Bank. They're up and running, and they're doing work for their clientele. We have Sandy Spring Bank is supposed to start, I think, on Monday, and there's another local bank called Main Street Bank in Fairfax. The nationals are supposed to already have started, just like what you heard from Bank of America. But I haven't really gotten feedback on them today. We've just really, frankly, been busy submitting applications.
Stefan?
I don't have anything specific on banks and on which one. I'd heard that about Bank of America, and but I don't know. I did want to go back to the last question. There is a certification on the application that you need to sign, and it says current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. So everybody needs to sign that. But once you've signed that, my answer about money is fungible applies. If your organization has a problem relating to Corona, even if you can pay payroll, you can use your payroll money for something else and have these funds be used to pay payroll.
A lot of questions about, thank you, a lot of questions about banks. And so I think folks are curious, and I know we talked about this a bit, but not so specifically. What kind of relationship do you have to have with the bank in order to submit an application through that bank? Because some folks are mentioning that they are doing it, even Joey mentioned, some of his clients or people he's working with, they have relationships with those banks. So do you need one? If so, what type of relationship do you need? And if you, by the way, don't have that kind of relationship with a bank, what are your options?
So if I can take this one, number one, the banks, as long as you have a bank account with the bank, you have already enough of a relationship to knock at their door and make a request. And the reason why I was saying that we need to do this with an existing bank relationship because the bankers have told me off the record that they're not going to be looking for non-clients to be on the top of their list. They want to service their existing client base first, and then they're going to service the people that are coming in the door that are brand new. So technically, you're sort of going to be back of the line if you go to a brand new bank that you've never dealt with, saying, hey guys, I want to borrow money from you. Ideally, if you're an institution, you've got a banking relationship with some bank, you really, really need to knock at their door first. If they don't accept you, then you got to start looking for alternatives, and then you can go to another bank.
We've heard quite a bit, by the way, Joey, that people have those relationships, meaning they have an account. They're not getting calls returns. They're not getting emails returns. They're not getting a response, and they feel that they're going to miss their opportunity because maybe they just don't have a lunch level relationship with a banker at the bank.
So if that's the case, some of the banks like Bank of America, like I said, are trying to do it online, so you don't really need to interact with a banker. Other banks, what they're doing is they're just saying submit the application electronically to them through an email, and they'll accept it. If you are in the unfortunate situation where your bank is not giving you time of day and your bank is not talking to you, then you're going to have to go to some other bank and see if you can submit online and see if you can get in. Okay? But the problem you will be dealing with is most likely you will be, still back of the line. And that's just because of the volume, unfortunately.
And maybe the other piece of, the other opinion could be, and consider switching banks later if they're ignoring you now. When you need them now, if they're ignoring you, maybe it's time to change. One of our callers gave us some really helpful tip. Apparently, the Chase Bank has opened their portal as of a few hours ago, in case folks want to try that.
So if it's a portal, it's much easier to accept because you're not dealing with a human being.
Yep.
They still may put you in the back of the line if you're not an existing Chase client.
That absolutely could be the case. I think that at this point, we just need folks to be able to, that doesn't mean they shouldn't try.
Definitely they should try.
Yeah, okay. I want to go to, this is a very interesting question and something we deal with quite a bit at Muslim Advocates. A bunch of different people have asked variations on this question. Does apply, unfortunately, a lot of institutions in the Arab, Muslim, Middle Eastern, South Asian communities receive a lot of government scrutiny already.
Yes.
And are nervous about that. And so we have quite a few people asking, they feel like they're in this tough position. They need the support. They need the help right now. But is this basically inviting more government scrutiny of their operations?
Well, I mean, anytime you take money from the federal government, you're agreeing to allow them to see your financial operations, and that's just part of when you get federal funding. So I don't see any other way. But to be honest with you, any U.S. organization that gets federal funding would be subjected to the same litmus test.
Stefan, I was wondering, I don't think that concern is necessarily such a big concern in the Jewish community, but do you have any thoughts about this?
Slightly different concerns, I guess, in two different directions. One, I don't see any evidence that was the intent of this, this was planned to be a backdoor way of bringing scrutiny on organizations, but it's not, frankly, completely implausible, but it was not the intent. Interestingly, Jewish community historically has a lot of First Amendment concerns with accepting government funds, and that has changed. I think there's been an evolution on that over the last few years, so that we're comfortable doing that up front. But in this context, there are going to be many more synagogues believing they have no choice but to go for this money when they wouldn't have done that in the past because the situation has changed on the ground.
No, that's very helpful. And for those of you who've been thinking about these issues, it is something that's being discussed amongst many of the civil rights organizations, like what a challenging question this is when the institutions need the help, and at the same time, a lot of civil rights organizations have concerns about money going to religious institutions and how that's used and whether people can discriminate and all these other things. So those are very important things to think about. And thank you for your point also, Joey. We have one last question. We just have so many questions. Unfortunately, we don't have time to go through all of them. But just as a reminder, we are going to send out all sorts of resources by email to folks who join the webinar, and also others, including like links to lists of SBA approved banks and other things. We have our own resources that are also going to be on our website, and we have a fact sheet as well that we'll be sending out. So this is the last question, and it's somewhat specific. It's a clarifying question regarding the 75% use of the loan. Does the 75% of expense limit pertain to the loan amount or to the entire budget? As in, does our payroll costs have to be 75% of total agency budget? Joey, is that something?
I mean, it's not with the budget, it's a percentage of the loan.
Okay. Oh, so that was easier than I thought. So, well, thank you so much. This has been so incredibly helpful. We're so thrilled to have you both, Joey and Stefan. Can't tell you.
Excuse me.
Bless you. Just can't tell you how much we appreciate your time today, your expertise, and your support for our communities that are trying to get access to this government benefit. So thank you so much. For everyone here, we really appreciate you all joining. Please stay in touch with us at Muslim Advocates. We're going to continue to send out resources and additional opportunities to be trained and connected. You can see on the slide right now, we have, you can get to us directly on email and also through our website, on Facebook, Twitter, and Instagram. Thank you all so much for being with us today.
Thanks for having me.
Thank you.
Look forward to working with you.
Have a great day.
Thank you.
Bye.